Good afternoon, everyone. Welcome to the FX Daily Roundup. Just bear with me. I just had to let the dogs out and get over a cold, so I'm kind of easy for me to get winded. Hang on. Sorry about that. But we have seen a man have seen quite a movement, especially here in the dollar CAD. Hang on. Doggone, I really lost my breath there. Been coughing my lungs out for the last few days. So, but here's development we've seen here, and we excuse me, where we've had this resistance level here at 33.36. Now, we had actually 33.07 had been holding the market relatively in check. We can see it on the 4-hour chart, but most recently, for the last couple of days, we've had our bias chart resistance at 32.88. And you see we blasted through that. But the key is going to be if we can get it. Excuse me. Apologize. Let me just mute the mic. Okay, sorry about that. If we can get a daily close above 33.36, that's what would be required to extend a new leg higher up in here. The day is still young, so we'll see what happens. Key would be also, we're not that far away. If we were to close below, we'll be here at 33.07. That had capped this market even in the last, key data. I think even also in FOMC day, and you can see how the market had kind of been trading or stuck in a range. The downside had been kept pretty much in check around that 32.24. Our bias chart resistance and support today was 32 even. If we got a break below 32, and it certainly looked like it would have pushed down there, would open the door. Now, we made a run here yesterday. Our bias chart resistance coming into yesterday was 32.88. The market topped out at 32.90. We kept the bias chart resistance at 88 and looked like we were going to break down. And then, boy, did we reverse everything. But this will be key if we close below 33.07, and this is on a 2-hour chart, then it opens the door for the market to pare back. Doesn't turn it bearish, but it opens the door for us to slide back into the range. Initial support be that 32.88, and then further down the old 32.56. On the daily, I think it's 32.54. So we'll see how the day finishes out. Euro got a turnaround, but we had our bias chart resistance at 950, and we're just a hair bit below that here. And dollar index, although it in and of itself is holding up relatively well. Another pair here is on the dollar peso. Now, the last we had previously yesterday, 1982, as our bias chart resistance, saying how well it had been holding up the bids. And one of the reasons why we kept it as a bias chart long, even when it was way down there, because it had really held above that 1923.6, and that was really the last Alamo stand was going to be at 1932, which was a 61%. So today we just moved the range up just a little bit higher to 1987.5 to reflect what we were, where the market was trying to push. Well, we saw some resistance, and I think it was right down the 2-hour, but the high was what? 1986. So it came about a little bit, pip and a half shot or so. But we have gone and pulled back. Our bias chart support is for 1972. You can see that coming across right here. But obviously the big movers today, and certainly you've seen the dollar yen respond to that. We talked about the reversal that we saw, that we mentioned it today in the European crossover webinar. I'll go and point it out here. And we mentioned how we saw a pretty good reversal there, because when you look at this, this yesterday, we had actually taken out the prior 3-day closes. That was just huge. You know what I mean? So you can almost make the case almost for here too, but definitely these three right here. So it opened the door for us to move lower. Obviously, equities moving lower certainly has pushed, those into the, long yen positions. Yen's considered a safe haven currency. Certainly, added to that and pushed it much lower. We're actually coming into some support in here. I think we had 740 with a secondary one at 696, but there's some, you can see a little bit area here where the pipe pick it up. But anyway, that being said, let's go on and move into our other markets. because it seems like there's a bit of stuff to cover, so bear with me. So here's the S&Ps. Man, this thing, boy, this is a little bit scary. Let's go and take a look here on a fib. %61% comes in 28.69, and I've got another level coming across in here for some additional support. Let me see, it was 28.56. 28.69 is a 61%. Hang on a moment. And I picked up a little bit a little while ago, made a couple of nickels, but it's not really a market that I trade very often. I used to a long time ago, but I moved into FX, pretty happy with FX, although the volatility's been down, so I've kind of, jumped around now as of late into gold and crude, something with a little bit more beta. Although we are starting to see, FX starting to heat up now. You're seeing right there with Japanese yen, some very nice movements there that can, move quite often or correlate well with, equities, especially the yen pairs like the Aussie yen. But that being said, you look over here. Let's go and bring this up here. Is right there. You see that 28.60 because you're getting right down here, because you always get these stabs, and like I said, who bought the low, who bought the high, who sold the high. So you usually get these exaggerations here. It doesn't mean that they don't count. I'm just saying we're looking where the volume is at, and you can see on the way back down when they jumped, they rallied up here just above the 28.60. Now this is on the spot. The futures is trading like about a two handle premium. Okay, so just figure that out. But nonetheless, you see some good touches coming in right here. And then if we do a fib, 28.68 is a 61%. And that's on the cash. Probably 28.70 would be the 61%. And 28.59 right here would be basically about 28.61 in the futures. Some nice volume support. The concern is we're not seeing any let up. At all. I picked out an area in here, and you can see the level in here. And I was mentioning, hey, this is a very good level. This 29.02, and that thing just barely even held and rolled back down. And so I was talking about 28.84 on the right in here. You can see that 28.84, and we saw the what's his name? Pedro asked. I posted the fill in the room, Pedro. I picked it up at, I think it's 28.85 and a quarter, and I spun out for two handles. I was looking for 28.90 and a quarter. I put the limit also in the chat room, and it did eventually make it up there. But as we started to roll lower, I said, you know what? I'm not going to let this thing turn to a loss, because I was expecting for us to come down here, and I was expecting a nice bounce because we already come down here like 28.85. You can see right here, and we didn't quite make it. So we came back up here, and I'm thinking, oh, okay, if we can come down here, we'll make a new low, and we'll really jump up. And I'm like, I'm not going to let this thing turn to loss. It'd be stupid. I'm going against, it didn't do what I'm thinking it's going to go and do. So why am I going to just go and force it? But it actually made it to the limit, 28. Now I think made it up to 28.90 and a half, I believe, if not 28.90 and three quarters. And I'm talking about the D's futures. But yes, I did pick it up. I posted in the chat room. I think I picked it up. It's 28.85 and a quarter, if I believe it was. You can roll through the chat thing, see it there, as well as when I said I bailed on it. But anyway, that being said, and the reason I'm saying, because y'all didn't see in the screen, but his message came on, and he's asking in real time because we're talking right now about the SPOOs. Here's my concern with the SPOOs, though, is that lots of times I like to, you've mentioned, remember I talked about here about a week ago, what it was, I guess it was, about this 29.85-ish, I think it was on a 30-minute chart. And the market did go above it, but we ended up sliding pretty good the very next day, beyond that. And so I like to try and come at these extreme levels, because I know how the SPOOs have a tendency to run people over, especially late in the day. I myself got ran over 2 weeks ago, but I hung on to it, and I came out okay. But frustrating thing was the very next morning, the European session, we were much slower. I was happy to get out with a few nickels. I'm like, holy smokes, I would have hung on. But so I was trying to come in at extreme levels. I don't trade it day in, day out, not at all. But my concern is, I thought that 29, you can see right here, and I like to go with the touches. I thought this 2904 looked like a freaking champ. Okay. And the reason I'm mentioning this, we can speak a little bit in depth, because obviously SPOOs are moving and we'll continue to move lower. And I mentioned this in the chat room. I go, hey, look, if this moves lower, this thing really might get ugly. And so here's this 2904. Look at all these touches. That's some good volume there, I mean, it maybe doesn't mean that that's a very low, but you should at least see some good short covering, maybe a bounce back of about 12 handles, because we're moving pretty quick in here, maybe at least, the very least, 8 handles. And we just kind of drip lower. So it come down here to this 2884, and I'm like, oh, this is a great one. And we only made it down to, in the spot, the cash, I think it's 2885 and a half or so. We rally up and I go, okay, if we can come back lower, we'll take that out. We got down to 20, I think it's 2880 in the cash. Like, this isn't good. Like, okay, I'll step in anyway. I'll pick it up as it started to come off of that. And I put in 2890 and a quarter. I thought, I was looking on a 5-minute chart, said, well, that's not being too greedy or whatever. And as it started to seem like it run out of gas, I'm like, this isn't holding up very well. I mean, a couple other things also was that the 10-year, which I put in the room here, had very good support level here at 59. I think it's 59.40 that I put in here. Let me see, what is it? Yeah, I think it's right there, maybe just a little bit lower, like 59.40. And we touched it and we went just a little bit above it. And here we are still sliding. I go, that is not good news. And also the gold market. I actually stepped in and sold gold short this morning. Covered, jumped back in again, and the market started really running against me. And then I was able to get out. Unfortunately, I stayed out. The reason I'm saying that, not to mention, oh, I did great. I only made a few nickels, and nothing to, like they say, nothing to go and write home about. My concern is, and actually, when I saw these SPOOs starting to slide, I'm like, holy smokes! I actually was working a limit in the D's futures at 15, 14, 30, because I thought, man, this thing might just go and rip up real fast. Because I'm thinking, okay, if they go down here, I'm talking about the SPOOs, they drop down to 2840, 2884 and beyond, it might spook the gold real fast to jump up and then roll back down, and we get this pop back in the SPOOs, but we didn't. So ultimately, I even got after that, I even canceled that, because I'm thinking, I'm not going to get in the way, because I'm concerned here. And I was thinking about this, is that, you see, we're not getting any let up. And holy smokes, it's not like as if we're down, 20 handles or 30 handles. I'm saying, from these moves up in here, we're down a pretty good chunk of change. Holy smokes. I mean, at least let's see a pause here. Let's see a dead cat bounce. I mean, dead cat bounce, we're not even getting a cat whimper, so that's my concern, is at this point, then people start to view things, instead of the glass half full, the glass half empty. And maybe this thing kind of gets away from itself. So at least for myself, everybody do whatever you want, but I'm not about to stand in front of any freaking trains or anything like that as we come into October, which is a seasonally weak period. Now, in some ways, you can think nothing has materially changed, but I'll tell you what, once you get a pretty good down dip, now all of a sudden the whole narrative changes. Well, that USMCA, there's nowhere that maybe it's going to happen, maybe it's not. The whole China thing, that's probably going to be put off. The administration, well, Trump's in a lot of trouble with this whole whistleblower, and all of a sudden everything, the glass is half empty. Okay, and now all of a sudden you find all these reasons why people should be selling. But if nothing else, from a technical standpoint, it ought to tell you something right here. Look, hang on a moment. We're coming into some decent levels here, and we're not even seeing a bounce. I mean, this is not a bounce, folks. You see what I'm saying? 3 or 4 pips after, or not 4 pips, think effect, what I'm saying. 3, 4, 5 handles, 6 handles, that not this kind of fall. And that's the concern. So what happens is then also people saying, well, you know what? It is October and it is a seasonally weak period, and the market's been disappointed, and maybe the employment numbers started to come in weaker, and we did get ISM, and now all of a sudden everybody has a handful of, or 10 fingers full of all these terrible reasons why the market's overdone. And then we end up sliding down. So that's what I'm saying is, How much further? Well, I guess probably be some pretty good demand there, 28.39. Once again, I always like to go where the touches are, but I'm not going to stand in the way of this thing on a Friday afternoon. It feels like a Friday afternoon, but on an afternoon where it's just sell, sell, sell. I mean, anybody who's trying to pick this up on the way down, think of it this way. Anybody who picked this up and has not gotten out are all underwater. Whether they picked it up here, 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 here. I mean, unless you picked it up what, about a handle and a half lower, you're underwater and you haven't gotten out. So that's what I'm saying is, and heaven forbid people are adding on and saying, oh, well, it's always BTFD. I'm sure there'll be a lot of demand here. Let me just buy some more here. And before you know it, it just gets out of control. And that's the reason I'm saying, so really this is just a more, today, obviously, we're covering the FX daily wrap up, which obviously we're covering other markets that are being affected. I'll tell you what, crude oil is holding up pretty much like a champ, though. I would have thought crude would be under a lot of pressure. Now, I did see some good resistance coming here at 52.32 and 52.05, just to mention that. But like I said, my concern is I'm not trying to be one of those, what do you call them, scare whatever, trying to free people out or anything, not in any way whatsoever. It's not like as if the gold market's turned around and gone, kabonkers. Remember, if you remember a couple of days ago, we were talking about that and we thought we'd see a decent little buy. We actually made a new low the next day, but we turned around and rebound like $25, and now we've added on to that. Obviously, equities have a lot to do with it, but you have to look, you see, new lows again. It's not letting up. The thing is, you'd rather see this market drop like a quick rock, like a stone, and then people would say, wow, let me help cover those shorts, and you can get some of that back and forth. Thing is, we're just dripping lower, drip, drip, drip. Before you know it, at some point you hit an area where, like Blake likes to say, you always want to put yourself in the other person's shoes. There's probably a few people, I've been there before, I hope they're not in too much trouble, is that, where they've added, we always hear that thing, don't add to a loser. Sometimes, I did that the other day, last week with the gold, but the market was still in a bullish mode, although it really ended up, setting itself up for us to work lower. We did see a bounce. We saw a bounce back up. Thought we'd see a bounce up to 38%. We came up about, it was $3 or $4 shy of hitting the 38% the very next day or day afterwards. But the point is that right now we are really starting to turn things around, and seasonally this is a weak period, and the market is not responding. It just keeps on breaking lower, and we're not seeing, at least we can see, we're seeing a little bit of a bounce. We're just not seeing any kind of a bounce. So anybody that's added on this, it's going to be a point where they're really going to be under some tremendous pressure. And if the market keeps on dipping lower, it's the old frog in the boiling water. And some of these people might have added on some of these positions that next thing you know, we break the dam and we drop. I don't want to go overboard. Maybe we drop like 15, 20 handles, like no problem. So just saying, be careful. That's what I'm just trying to really, this is more about just give a lay of the land where we're at right now. We looked over here at FX, but my thinking is be very careful here if you're trying to play SPOOs or corresponding markets, because we could maybe see this thing come a little bit under some trouble. We may see things eventually bounce back, but in the meantime, like I said, this is not good that we have not even seen even a bit of a bounce. Anyway, that's all that we have for today. Today's actually the last day to join us here with ForexAnalytix. And we've got the buy 1 month, get 1 month free. 6 month, it's 25% off. And if you get an annual subscription, it's going to be 35% off. And like I said, to me, if you ask me, the wealth of the ForexAnalytix is in the chat room. A lot of great traders that, quickly, and honestly share their trades, their strategies, their entries, losses, as well as gains. That's all part of the trading. Excuse me, all part of trading, and you have to be able to go in and manage those positions. So with that, like I said, today's your last day to register, so I would take advantage of that. But thanks for joining us here on the FX Daily Roundup.